I've got 3 growth stocks today to go over that have recently made the news and are being tipped by analysts that, well, they think they're going to do pretty well anyway. So I've got a healthcare company and 2 tech companies, although they are in very different businesses. The tech companies, one is in cloud computing and storage, one is in hardware. And of course, not all analysts are right. They are often wrong, of course, but all 3 of these having some, either their earnings or some good news, and have had pretty good runs actually so far, but these analysts are saying that it will continue, and we can go through all of them. So the first one I'm going to go through is Moderna, MRNA. This is a vaccine play. So right now there are a few different companies that are trialing vaccines to get rid of that thing that we can't say on YouTube. But obviously this trade has kind of happened already in a lot of people's eyes in terms of the share price movement. But actually, according to a few analysts, there is still a long way to go. So what is Moderna and what has happened recently? Well, this is, for all intents and purposes, really the leader in the vaccine space at the moment, and there are other companies which I will get onto. But essentially, they've agreed with the US government that they will supply 100 million doses of the vaccine that they are working on, and the vaccine is in phase 3 trials right now. They've also got an over $1 billion investment from the US government to essentially fast track all of those trials. So the stock has seen massive gains this year, up 250%. Obviously, on all of the news regarding the investment, regarding the vaccine, and regarding the possibility of them being able to sell 100 million doses to try and actually vaccinate people against this. So Oppenheimer in this stock are still saying that they see the stock has a way to go. The stock is currently trading at $70 right now. Their rating is $108, which apparently to them sees a 60% upside, even from here, even with the big move that they've had already. So from what we know so far with a lot of these vaccines as well, is that obviously none have gone through phase 3 trials, and also it looks like a lot of these vaccines may not be 100% effective, so maybe this illness won't be eradicated, but maybe if vaccines are about 50% or more, then it may be an ongoing thing that people have to take vaccines every year, just like the flu jab. So certainly that could be recurring revenues for these vaccines for Moderna, but also obviously the amount of profits that you can make per dose of vaccine is over time going to be reduced and diminished by competition, but that is the same for every business in terms of competition, and especially with healthcare. Oppenheimer also points out that Moderna apparently is, as of now, the only company that is poised to actually be able to make vaccines at any scale. So apparently being able to produce anywhere between the tens and hundreds of millions of vaccines per month. So apparently, according to Oppenheimer, this company really is just a step ahead in terms of the scale that they can produce these vaccines, and that's why they are liking the company. And this could be as much as $1 billion in sales next year. So in terms of the market cap of Moderna, currently trading at a $27 billion market cap, which is, if you think of it, they may be getting an extra $1 billion in earnings next year if everything goes to plan. It doesn't seem like it's actually too crazy in terms of the valuation, although of course everything is relative. So they could have $1 billion next year in revenue, but on the downside, there are some rivals here. So there are a mix of rivals that could also actually reduce the amount of money that Moderna can make. You have companies like Novavax and also Pfizer who are getting in on the act as well. So Novavax have just sold 60 million doses to the UK government, and even AstraZeneca are in on this as well. So there's certainly competition for Moderna here. Oppenheimer anyway say that we believe Moderna is the lead to provide major amounts of safe and effective vaccines. Their target is 108. On tip ranks, taking all of the different analysts, 12 buys, 3 holds, and no sells, with a consensus price target of around $93. As I said, trading around $70 right now. So those analysts definitely see some upside in this stock. Next, we move on to Dropbox, which I'm sure is a familiar name to a lot of you. It certainly is for me. Dropbox cloud storage. Essentially, there are some free options, there are some paid options. They also have individual customers, business customers, and they actually added some really good, solid business customers. They just had their earnings call, so we'll go through all of that. There are a few analysts that like this stock right now, and there are a few that don't. And it's not really the most loved stock, I would say, but certainly a few days ago, Jim Cramer was actually asked on his show, CNBC, what do you think of Dropbox? And this was before the earnings call, and he said he wasn't really a buyer, he's more of a seller. So what he really means is he's not massively into the stock right now. But in terms of the earnings call, they actually beat estimates, and pretty much it was a good quarter. So 16% increase in revenue, and also 15 million paying users versus 13.6 million. So as you can see, pretty robust growth, pretty good growth. And now RBC Capital, they say that they have a price target of $30 on the stock. That is pretty good considering the stock is trading around about $20 now. But over the last year or so, if you just look at the share price, there isn't much movement. You get some moves to the upside, some moves to the downside, and it sort of is just trading sideways, even though they do seem to be increasing their users, increasing their revenue. Q3 forecasts are also very good and ahead of what analysts were saying. One of the downsides for this is that in the earnings call, they said that their CFO was actually going to leave in September, and the chief accounting officer will be taking his place. So that's never good news really to have someone leave, but it does happen a lot, and so that's just par for the course for business. It's just what's going to happen. So 90% of business users adopted a new desktop app from Dropbox, which is a good thing. And also trial signups, and both for individual and business, continued at a 20% higher rate than pre-health situation, which actually I think is a really good sign, because well, that means there's a lot of tech companies now that have really just benefited from the health situation. And really what we're looking to see is, can they keep those growth rates, or is it going to drop off significantly? And if it does drop off, then obviously that's not a good sign fundamentally for the business, but apparently Dropbox keeping that rate, which is a pretty good thing. Now, the amount of revenue they earned per customer went down, and this was because they had some pretty big customers come on board, which obviously got some discounts. University of Michigan, Northwestern, University of Pennsylvania, Arizona State, big orders, lower earnings. But the analyst RBC says that he sees that as a positive, just getting bigger customers on board, and yeah, I would kind of agree with him. On tip ranks, all of the analysts surveyed have 5 buyers, 2 holds, and 2 sells on this one, with a consensus price target of around $26, which is about $7 higher than we get at the moment. As I said, not really a massively loved name with some crazy price targets, but I think people really looking for more out of this stock, so we'll see how it goes. Next on the list is a tech stock in the hardware space, but I guess not what you think. They're called Lumentum Holdings, and they have a few different businesses actually. So one of them is just manufacturing fiber optic cables for telecommunications, which obviously speeds up communications. They have a few other hardware businesses as well, including a lot of businesses that manufacture lasers and even manufacture the hardware for the 3D Face ID components that go into Apple smartphones, at least the more modern ones. And obviously that's been a big driver for growth over the last few years, as Apple are putting these in more phones. And certainly this year, they'll have 4 different models with these 3D Face ID components in there, so definitely a big boon for Lumentum. Lumentum actually had a really good quarter, again just coming out with their results. So they beat estimates pretty much across the board in terms of revenue growth, also profit growth, and apparently they said demand for their highest margin products, the products that they make most money from, they actually had more orders than they have capacity to fill. So one thing I would look for there is, why can't you fill that capacity? Why didn't you actually foresee that demand coming? But in terms of the analysts, the price target is 115. That has been moved up from 105 as it was before. The current market price of Lumentum trading at $92 at the moment. Now, Lumentum does have a rival as well, and I honestly don't know how to say this company. It's either 26 or IIVIs, essentially they're Roman numerals, but they manufacture these same 3D Face ID components that will be going into the Apple iPhone. And well, the way Apple work is that they usually like more than one supplier for something. They usually choose a main supplier that supplies the bulk of a bit of hardware, and then one or two other suppliers, just so they're not reliant on one supplier for that, and that does make sense. According to tipranks.com, 13 buys, 1 hold, and no sales on this one. Consensus price target is 107. The main problem really is that right now it is trading near all-time highs. So can we see just continued growth? And that's really the only way the share price is going to follow that up. Market cap, 7 billion, a 63 times price to earnings ratio. So as we said, that revenue growth does have to continue if the share price is going to keep growing with it. But it looks like a solid business, and they have many different areas that they're making money from right now, and there is a lot of demand. So maybe the analyst is correct, who knows. But in terms of these growth companies, as always, do your own research here. This is just 3 in a very large market, many other growth companies around. But you know, in tech and cloud and also health, certainly not financial advice this, but these analysts as well, maybe could be wrong, but some very interesting businesses that look to be doing pretty well, both in the health situation and possibly as we come out of it. But as always with growth companies, risk is involved, volatility is involved, but that is what makes them a growth company, and the potential for rises as well as falls. Hope this was helpful. Just gave you a quick overview of these stocks. If it was, please just give me a thumbs up. Thank you for watching, and I'll see you in the next one.